Welcome back to Lunch at the Market. You may have caught Bruce Berkowitz on CNBC today, where he recommended St. Joe, symbol JOE, and Winthrop Realty, symbol FUR. If you've been to magnumopusfinancial.com/education, then you've already seen the great interview Bruce did a couple of months ago with Consuelo Mack from WealthTrack. If not, then what are you waiting for? Today's hit on CNBC moved both holdings dramatically. But when you watch the video from Bruce on the Magnum Opus Financial website, you'll know that he didn't invest in these for a pop from a CNBC appearance. He's a smart guy that's returned 13% year over year for many of them. That's certainly more than we can say for the S&P 500 index over the last 10 years. FUR has a rather nice dividend, nearly 6%, and St. Joe is sitting on what will become an international airport in Florida that will open up the Panhandle. He covered the story briefly on CNBC. So for more on this story, go to magnumopusfinancial.com and click on Investor Education, and the video will show up right there. Don't worry when the sound doesn't start immediately. Thankfully, the commercial doesn't have sound, but the sound works just fine when we get to the Berkowitz interview. Watch the whole segment, as we regard this as a much-watched video for all smart investors. So there you go. Your real estate plays are FUR, JOE, and we still like the IYR as a nice broad way to play real estate, as well as the 3 actively managed mutual funds you can own from Invesco AIM. Okay, last story, 3D. We like IMAX. The company is at a 52-week high, but the numbers that are coming in on how many people are seeing Avatar on a 3D screen versus your traditional cinema screen are staggering. Something like 25% of all movie sales are coming from 3D screens, yet the screens are less than 5% of all screens in the U.S. That's some pretty heavy lifting for such a small number of theaters. This stock is also one of Dave Peltier's stocks under $10 from the Street.com picks, and it is liked by as many a smart person on Wall Street. The company has decent cash flow, and it is better than 10% short interest. As the stock climbs higher, these shorts are going to have to cover, sending the stock upward. There's more talk than ever over 3D television. And on CNBC this morning, Jim Goldman basically broke the bad news that if you bought a TV early last year or before and want to take advantage of the new 3D technology, you're just going to have to buy a new TV. This means that Best Buy, symbol BBY, their competitor H.H. Gregg, symbol HGG, and Corning, symbol GLW, are also buys off this new trend. Also, we're going to add DirecTV, symbol DTV, to the group for 2 reasons. All of the programming wars seem to be between cable companies and content producers, while satellite companies like DirecTV continue to carry Fox, HGTV, and the Food Network without any interruption of service. DirecTV has also paired up with AT&T for their bundled deal. With DirecTV making 3D technology available soon on their HD boxes, this will be the preferred method of watching this new TV, maybe even all of TV. Panasonic Corporation has introduced the Viera Plasma HD TV with full HD 3D at the show in Las Vegas this week. So we're going to declare our own 3D Revolution ETF that now includes IMAX, GLW, BBY, DTV, PC, and HGG as 6 positions in this new 3D Revolution ETF. The order of the stocks is in this index were given by weighting, so IMAX is given several times more exposure than H.H. Gregg. We'll be looking through the rubble to find out who's making the parts for the TVs and who else will benefit. We'll add those to the ETF as the theme begins to play out. I can't imagine more than 10 to 15% of all televisions in the world not being 3D in, say, 20 years. That means that 85 to 95% of people will replace their televisions with one that supports 3D in the next 20 years. That doesn't even count for the equipment used to film and deliver the content. So, get ready, folks. Here we go. Thanks for tuning in. Check out ACAS, that's American Capital Limited, one of our financial spec plays. They're a very low-dollar stock in a hot industry. They do equity and debt investments in buyouts, growth capital, and debt and equity recapitalizations of early-stage, middle market, and mature public and private companies. Think M&A, which we think we're going to get much more of going forward with so many companies that have depressed stock prices and companies looking for earnings, synergies, and acquisitions in which they can do with some cost-cutting to run a leaner, more efficient business. ACAS generated free cash flow from its operations, and more than half of its share price comes from cash on its balance sheet. The forward PE is only 7, and the market cap is about 15% of the enterprise value. This company is worth a whole lot more than it's trading for. We'll throw in Lazard Capital, LAZ, into that story as well, so that's a twofer for you. Check out the new posts on our blog on metals, mining, gold, platinum, and palladium by going to www.magnumopusfinancial.com and clicking on the MLF News Network button to the blog. Leave some comments and join in the conversation. Don't forget to visit www.shortyawards.com and vote for us in the finance category if you like what we bring to you every day. You can vote for us in the finance and the education or news categories. You can actually vote for us in all three, and we hope that you do. Send us your comments on the Contact Us section of the Magnum Opus Financial website, and we'll see you guys tomorrow.